Welcome back everyone, and in this video we're going to discuss the electric vehicle stocks that took over the market in 2020. So we all know this past year has been really revolved around the new transition into an electric vehicle society, and these stocks have absolutely exploded and were some of the best performers out of the entire stock market. We saw large companies like Tesla grow more than 700% over the past year and currently trade at a $700 billion market cap. We also see smaller companies like Nio and Xpeng with terrific numbers and growing deliveries month over month. And in this video today, we're going to discuss the year-end delivery numbers for the three major EV companies and go over some headlines to why they can continue to climb and reach new all-time highs over the next few weeks. So if you're new to the channel, everyone, I am the Gen Z investor. Every single day we talk about the stock market and we go over different stocks you can buy and sell and discuss any major market news or headlines. And what we're doing in today's video is going over all the major headlines regarding Nio and Tesla and some reasons why these companies can soar to even higher levels. So please hit that like button and subscribe, and we'll jump right into this electric vehicle stock video and start off by taking a look at the December 2020 delivery numbers for these three major players. And we're going to start off with Tesla. The company has absolutely exploded over the past year, and they are the largest car manufacturer in the world in terms of share market cap. Currently, the company trades for $755. Their share price has grown more than 700% over the past year, and they now trade at a market cap just below $700 billion. And they are the newest member of the S&P 500 and are within the top 10 largest holdings of the index at this moment in time. And if we take a look at their delivery numbers for this last year, you can see they brought in 499,550 deliveries in 2020. So they just came slightly short of hitting that 500,000 milestone or that 500,000 delivery expectation that they were striving for. So the company came extremely close. They didn't really hit that mark, but it's still very attractive to see that they were able to deliver almost 500,000 vehicles during a year with a global pandemic. During a point in time where the production facilities couldn't really operate at full capacity with regard to limitations and social distancing, they were still able to deliver close to 500,000 vehicles during this tough time in the market. So that's some great positivity for Tesla, and their investors can be really pleased with these results. And of course, in this video today, we're going to discuss some future expectations for 2021 delivery numbers down the road, and also go over some headlines why analysts actually believe Tesla can climb even higher and hit over $800 per share over the short term. And we're also going to discuss their plans to dominate the Chinese market, which is actually the largest and fastest growing EV market in the world. But before we do that, we're going to jump over to the second massive EV company that has really taken the market by storm over 2020 and into this current year, and that is Nio. This company was actually one of the best performing stocks on the entire market last year, and their share price has grown 1,289% over the past 12 months. The company 1 year ago was trading for around $3 per share, and now the current share price sits at over $50. They have a market cap at just over $83 billion and did see a nice uptick to start 2021 after we got their year-end delivery numbers. So in terms of delivery volume, Nio is nowhere near Tesla. In the company's entire history, so far in all their years of operation, they have only delivered 75,000 vehicles. And in 2020 full year, Nio delivered just over 43,000 vehicles, which was actually a 112% increase year over year. So the company has seen strong delivery performance, and you can see right here, quarter over quarter, the number of deliveries has been absolutely incredible. And over the past 3 quarters of 2020, they grew deliveries by over 100% each and every time. And if we now compare that to Tesla's deliveries, which are still growing massively year over year, you can see in Tesla's weakest quarter of 2020, they actually delivered more vehicles than Nio has in the company's entire existence. So that just kind of shows you the different levels of deliveries and the different levels and kind of progression of where each company actually is in the market right now. But overall, Tesla, similar to Nio, was growing year over year, and over the past 2 quarters, we did see a significant growth in year over year deliveries. And the third EV company we're going to take a look at today is Xpeng. They currently trade around $41 per share and haven't seen as much upward momentum over the past few weeks as Nio and Tesla have. They have a little more scrutiny around them, the smallest company of the three with only a $32 billion market cap, and they saw terrific growth early on in 2020, and shares actually accelerated more than 240% from the $20 range, but have seen a massive pullback as of late and are down around 42% from their previous high. And they actually recorded some beautiful deliveries as well, and they rose 112% year over year for their delivery numbers. And if we actually take a look and break down these numbers, in 2020, Xpeng delivered just over 27,000 vehicles, which is a great sign for the business. And their latest quarter saw a 303% year over year increase and a 51% increase quarter over quarter. So you see, as time goes on, in the fourth quarter of 2020, this company absolutely accelerated. Monthly delivery stood at over 5,700 units, which is 326% growth on a year over year basis. So as a whole, this company is the smallest compared to the other three, but they were still able to post massive delivery numbers to close out 2020. And now we're going to go over some of the most recent news events surrounding Tesla and Nio that may lead to their share price climbing even higher than where it is today. First, we're going to take a look at Tesla, and Morgan Stanley has actually increased their price target for this company. The new price target now is set at $810 per share, which represents another 10% upside from where we sit today. And Tesla has seen a rapid surge in 2020, but Morgan Stanley still believes there's more room to climb even higher. So the previous price target for a share was set at $540, so a significant increase to this now $810 range, which implies another 10% climb to hit this level over the next 12 months. And they also boosted their forecasted delivery numbers for Tesla over the next decade and are projecting 5.2 million vehicles sold by 2030. And that's a big bump up from the previous level, which was set at 3.8 million. And why they did this is because Tesla was very resilient and proved to have better than expected deliveries in the fourth quarter. So even during a tough time, the company was able to pull through and almost hit their 500,000 delivery mark. And the company also sold a lot of shares throughout 2020 and raised an extra $5 billion. As the share price continued to climb even higher, Tesla management decided to sell more shares in order to take that cash, which will allow them to grow their operations with providing funds to actually grow their manufacturing plants, allowing them to produce more vehicles at a greater scale, reduce costs, and have more vehicles sold all across the world. And that momentum has really added to this new increase in price target by Morgan Stanley. And they also struggle to find any other companies that are more innovative or can produce this amount of vehicles at scale like Tesla is already doing, and they don't feel many other competitors on the market will be able to catch up to Tesla in the EV space, and they do believe that Tesla right now is already much farther ahead than any other main competitors in the vehicle space. And another reason why Tesla can climb moving forward is because they are going after a Chinese market share. So Tesla is already one of the biggest EV companies within China, and China is actually the largest and fastest growing electrical vehicle market in the world. They have a CAGR of over 25% for the next 5 years in the future. So significant growth rate in the Chinese EV market, and Tesla is doing everything they can to be a main player and continue to be a main player for many years down the road. So what they're doing is that they reduce the price on all their made in China Model Ys. So they have a Shanghai Gigafactory, which is actually producing the Model Y SUV. And for every Model Y now made and manufactured in China, they have reduced the price to be cheaper than the other SUV electric vehicles by Chinese manufacturers. So they're doing a great job of beating the price on their competitors, and the new price of the Model Y is set at around $52,000 US, which is around $8,000 to $10,000 US cheaper than other Chinese-made SUVs, such as ones from Nio, Xpeng, and Li Auto. So as a whole, they're doing a great job actually reducing prices. The vehicle is now being manufactured in China, so a lot less shipping costs to get the vehicles there because they're actually being manufactured in the country that they're being sold in. I think this is a great move by Tesla, keeping the price of the made-in-country Model Ys as cheaper than the competitors really will allow the Chinese natives to pick an American brand like Tesla over some of their native rivals like the Xpengs and like the Nios, which are already Chinese-owned companies. So I think Tesla's doing a great job. I think the fact that they're going to be priced way more competitively in the Chinese market for their more expensive vehicle, the Model Y, which actually comes with greater margins, can really help the company long term. But they're not the only company making moves in the Chinese market that is trying to expand. Nio hosts their Investor Day presentation on January 9th, and they're planning to unveil their new flagship sedan, and this will be the first ever sedan that will hit the market coming from Nio. So I think as a whole, Nio is going to do a great job coming out with a new market and a new vehicle to compete at a lower price and actually make it more competitive compared to their previous SUV line. So up until this point, Nio has solely been focused on SUV vehicles, which you can see Tesla is now going to be a main competitor in that space with the reduced Model Y. So to kind of keep up with the rest of the market, Nio plans to unveil their first ever sedan on their Investor Day presentation, which takes place on January 9th, 2021. And that's not really the only thing Nio plans to come out with. They're unveiling a new 150 kilowatt powered battery, which can provide around 900 kilometers of range or over 550 miles on one single charge. And that's absolutely incredible. That's a ton of range. Not many competitors are at that level right now. And if Nio can come out with this battery, unveil it at their Investor Day presentation, and people actually feel it's going to be successful, then this could be a huge driver of future business. And that may be the one point of difference that will take customers away from an Xpeng or a Tesla and into a Nio vehicle because of the extended range on the new sedan or all the SUV models that they plan to come out with. And another good sign is that Nio is coming out with a second generation battery swap station during this Investor Day presentation on January 9th. If you're unaware of what a battery swap station is, it's similar to a gas station in the United States, but it's tailored towards electric vehicles. So at a typical gas station for your normal vehicle, it may take between 2 to 5 minutes to fill up your tank. But for a traditional electric vehicle like a Tesla, if you want to go to a supercharger, it may take anywhere from 20 minutes to half an hour. So that big time gap is really what sets people away from electric vehicles, and is really a big turnoff for people who like the convenience of filling up your gas tank very quickly. So Nio has actually solved that problem with China, and they have over 155 battery swap stations right now on the market where you can go in with your vehicle, pull into this station, and it actually removes your existing battery and replaces in your car a fully charged battery in under 5 minutes. So they're reducing the time it takes to get a full charge on your vehicle, and they're expanding their battery swap station ecosystem. They have a nice deal with the Chinese government to build more stations all across the country, and they plan to come out with one new battery swap station every single day over the next year, so making their total battery swap station network up to 500 plus stations over the next 12 to 16 months, which I believe is a great feat for Nio. And that one ecosystem and that one network of battery swap stations can really help them compete and grow far ahead of other smaller EV brands that are going to try to enter into the space. So we have a lot of news coming around for all these companies. Tesla has unveiled the cheaper Model Y. Nio has their Investor Day presentation. We had an increase in price target for Tesla shares. And as a whole, there's a lot of positivity in the EV sector right now that may send shares up even higher. And the last thing we're going to take a look at is the projection for Tesla deliveries in 2021. We haven't gotten official growth rate from Tesla just yet. In an interview that involved Tesla's CFO and Elon Musk himself, the interview asked, is it achievable to hit between 850,000 and 1 million deliveries in 2021? The CFO himself was kind of reluctant, didn't say too much, but Elon Musk chimed in and said, you're not too far off. So that's a good sign. The question was asked between 850,000 and a million, and Elon Musk said, you're not too far off. So I think we can expect at least 750,000 plus deliveries over 2021, which again will be a nice record set for Tesla and really shows that they are much farther ahead of their competitors in the EV space. And a lot of people are worried that Tesla will not be able to survive when a lot of name brand, traditional car manufacturers enter into the fully electric space. But the one thing people have to understand is that Tesla's already delivering hundreds of thousands of vehicles at scale all across the United States, Europe, and even China. So the fact that other companies are going to have to start first dishing out some electric vehicles and go through all the tough times it really is to get them on the market during the first few years, Tesla's already gone through that growing pain. They've already learned from it, and I think they are still farther ahead than people expect away from some traditional car manufacturers. So as a whole, companies like Tesla, Nio, Xpeng, and many other electric vehicle names absolutely dominated the market in 2020. All of the hype was surrounding these electric vehicle companies. There were a lot of new names entering into the space that have never even produced a vehicle yet. So as a whole, we've seen a ton of run-ups as of late, but some of the main players in the Chinese market that is some of the fastest growing industries in the world, expecting 25% plus growth year over year, are of course Tesla, Nio, and Xpeng. All of these companies are doing great things, trying to expand into greater nations. Tesla's evolving day over day. Nio has plans to enter into Europe over 2021. And just as a whole, these companies are growing at a massive rate. So in this video today, we did take a look at all the delivery numbers for each of these companies. We also saw that they're growing deliveries quarter over quarter by a 50 to 100% range, which is absolutely incredible. And the one EV company I do own a small position is actually Nio. I own this in my very small, high risk, high reward portfolio, and I'm up close to 12% on this very small position. For those of you who have been following along with the channel, you know I do have a main portfolio that sits at around $79,000 that invests in blue chip dividend paying companies. But I also have this very small new high risk portfolio that I'm going to put money into each and every month to try to see how we can do buying more riskier, high SPAC stocks that may have the potential to double, 3, 5x down the road. So Nio was actually the first company I bought for this portfolio. I do think it does have some potential to grow long term, and that they can continue to expand, develop their battery swap stations, and actually grow as a whole. I think this business can be a long-term profitable name in the Chinese EV space. And I thank you for watching today's video. We just went over some of the most recent headlines of the EV companies. They started off very strong for 2021, and people are still very bullish on the sector and believe they can climb even higher than their records that they are sitting at right now. So thank you for watching, and see you in tomorrow's video.